The OECD cuts its global GDP growth forecast, and UAE companies resist inflation compensation for workers. You're watching the Daily Brief with Forbes. I'm Ramia Faraj. The world economy will take a bigger hit than previously forecast next year due to the effects of Russia's war. That's according to the OECD in its bleak report titled Paying the Price of War. The OECD slashed its 2023 global growth forecast to 2.2%, down from 2.8% in its previous estimate in June. It says a number of indicators have taken a turn for the worse, and the global growth outlook has darkened. 67% of UAE businesses have received requests from employees to boost pay amid rising inflation. That's according to Mercer, which surveyed over 200 global and local companies from all sectors in the UAE. Their research reveals only 16% have raised pay or allowances. These companies raise salaries by 4% on average during annual salary increase cycles at the beginning of the year. Most businesses in the UAE, however, are resisting, even as the central bank projects UAE inflation at 5.6% this year. Lebanon expects a written offer from the U.S. mediator regarding the demarcation of a maritime border with Israel by the end of this week. Lebanese officials say negotiations to demarcate the southern maritime borders of Lebanon are in their final stages. They say the negotiations will guarantee Lebanon's right to explore gas and oil in these specified fields in the exclusive economic zone. Officials say they hope that exploration in Lebanese waters will contribute to the revival of the economy. The British government does not comment on market moves. That's according to a spokesperson for Prime Minister Truss, after the pound plunged to its record low against the dollar today and British bonds were hit by concerns over the government's fiscal plan. The spokesperson said neither the Chancellor nor the Prime Minister comment on the movements around the market. He said there are no plans to make any changes to the measures set out in the so-called mini-budget by Finance Minister Kwasi Kwarteng on Friday. Asian shares closed lower today, extending last week's sell-off as global markets are battered by concerns about a possible recession. The Hang Seng Index closed 0.44% lower, the Shanghai Composite fell 1.2%, and the Shenzhen Composite on China's second exchange dropped 0.75%. And that brings us to today's Forbes Real-Time Billionaires ranking. It tracks the daily ups and downs of the world's richest people. Our biggest loser today is Gautam Adani, down $6.4 billion with net wealth of $143.1 billion. Our second biggest loser today is Mukesh Ambani, down $2.2 billion with net wealth of $85.6 billion. And our third place loser is Hong Kong billionaire Li Ka-shing, down $1.1 billion with net wealth of $32.4 billion. Check out our website and our social media for all of the latest Billionaires news. Volkswagen has announced a $2.9 billion battery parts joint venture with Belgian materials firm Umicore. It makes it the latest European automaker to bring battery supplies closer to home in the shift towards electric vehicles. While raw materials, among them lithium, cobalt, nickel, and manganese, will still be largely sourced from across the world, cathode production for batteries will take place in Europe under the joint venture, most likely at Umicore's Poland plant. I'm Ramia Faraj. This is the Daily Brief. Thanks for watching. See you tomorrow.